red and green. It's called tape. It's like
Yes,
reading the
that's
tape.
what I'm talking about. Yes.
Yeah, some guys use that. It's you're sort of multitasking. If you're new, you're probably gonna miss the tape anyway. But
Right.
the TS is the tape. That's what we call tape reading, and a lot of guys that get in on plays when they see that does have to do with volume and selling of a price, settling of a price. So sometimes you'll see it turning green, 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 and that lets you know that the buyers are coming in. And if it's going super red, that lets you know the sellers are coming in.
You talking about
So some guys do
time and
use
sales?
that to get in.
About the time and
Yeah,
sales?
time and sales.
Yeah. So yeah, level two times. I don't know. I don't necessarily use it. I've seen people use it before. Honestly, with me, my eyes just can't take it. It's just too much going on at one time. So that's why I don't use it. But there's a lot of YouTube videos out on it as well. And I remember when I first started, I looked into time and the sales. I saw people talking about it, but it was too much for my eyes. I couldn't take it. Couldn't take it. Oh, that's a good
Okay,
question though.
thank you.
That's a great question. All right. Other questions? Any other
I have
questions?
a question, Chris. Are you
Fire.
ready?
I'm ready. Fire away.
Take a deep breath.
All right, 1 second. Let me see.
Okay.
Let me make sure. Let me make sure I get the voice who I'm talking. I'm talking to Miss Ebony, right?
Yes.
All right.
Okay, so I've completed my course,
Yes, ma'am. Good
and
job.
this is not my first trading. This is not my first trading
Hold
program
hold on,
that
hold
I've
on, hold
done.
on, hold on, hold on, Ebony. Hold on 1 second, Miss Ebony J. Everybody, she said something amazing just now. She said she did what? She completed the course. Let's congratulate her. Congratulations, everybody. Clap CYC's in the chat. Put
Congratulations.
CYC's in the
Thank
chat.
you, thank you, thank you. Okay.
All right, go with your question.
There's a lot of information in my head, but
Mm-hmm.
I'm finding that I'm getting stuck at the same place where I got stuck before, and
Okay.
then I give up.
Okay.
So I'm having a problem when it comes down to actually executing and understanding that.
Okay.
So I went to on demand and I tried to click around. I watched YouTube videos on how to set a trade.
Mm-hmm.
I've done all that. I think I might have set a trade, but didn't see the marks on the count on the chart.
Okay.
And then I don't understand. I tried to pull up the options chain. Don't really know what that's about. Then I was trying to look for the 50, like you said, the point 50. Still really
Mm.
didn't know what that was about.
Gotcha.
Looking for the date. And then I hear a lot of people saying that the options, they have a hard time because of
Theta.
is it the Greek?
The theta.
The
Yep.
Greek.
The Greeks.
Yeah.
Mm-hmm.
And I don't understand how that applies to when I'm trying to make a trade. So I hope you're getting all of this because I'm trying to put my thoughts together.
No,
So
I
when I'm
got you.
doing a trade, I can't do a trade without signing a contract, or can I just place a trade on the chart? And if I place the trade on the chart, how do I know how much I'm investing versus how much if I do my stop loss and my target?
Okay, got you. So let's do this. Okay, first, I got you. Let's do this. The problem is this. You're doing too many things at one time, right? So what I want you to think about is this. When you first, matter of fact, let's walk through it right quick. We're gonna walk through a whole trade right now, okay? So you can
Okay.
see me walk through the entire trade. Let me put up my screen. Boom, boom, boom. And we're gonna do it the slow way first, okay? As far as when I say slow, I mean the speed wise. All right. So let's pull up. Let's use Apple. Let me share my screen. Okay. All right. So we remember, first thing first, when we're going to enter into a trade, the first thing that we're going to do is make that bigger. 1 second. Ah, 1 second. There we go. Push too many buttons. Can you see me? You see my screen or you see me? Which one do you see?
I see your screen.
Okay, perfect. So you do not see me. 1 second. That's perfect.
I see both. I see you and the screen.
But do you see the screen like
Screen is the main. The screen is big, and you're just a little square at the top.
okay, that's perfect. That's how I want it to be. All right. I don't know why my other screen is not showing up like that. I have no idea. But let's go. Let's rock. That's weird. Hold on. This is going to drive me crazy. 1 second, everybody. Let me figure out what's going on here.
Short drive.
I know, right? Let's see. There we go there. There we go there. Okay, perfect. Oh, I know why. Slow moment. Let's do this. Hey, bud. All right. Okay, and there we go. Perfect.
Man, you got big fast.
All right, perfect. Here we go. So, everybody, especially new people, first thing first, what you do when you're going to buy something, you always go here to all products, right? Always go to all products. When you hit all products, you come down here to your expiration dates, right? These are expiration dates. So we're looking for a short expiration date or a long expiration date. That all depends on the type of trade you're making. If you say, hey, I'm going to make a day trade, you may want to get a 2 or 3 week. You might want to get a 2-week expiration date or a 3-week expiration date. If you say I'm about to do a long-term swing trade, you might want to get a 12-month expiration date. If you say you're going to do like a middle swing trade, you might want to do a 3 to 6 month expiration date. Does that make sense so far, Ebony? Miss Ebony? About expiration dates? Okay, perfect. So now when you select the
Chris, real quick, before you get too far, let me get ahead and tell them, because they're going to ask. Chris always tell you, buy as much time as you can afford, regardless of however trade you're looking to execute. Mm-hmm. Because realistically, the contract is going to move regardless for you. And having more time is going to save you in pullbacks and retracements and stuff like that.
Yep, exactly. Good stuff, bro. Exactly. So say, for example, we choose this August 23rd expiration date. So now with this August 23rd expiration date, now what are we looking for? So Miss Ebony, I'm asking you, what are we looking for, Miss Ebony, when we come to this expiration date? August 23rd. So what's next?
I'm thinking I'm looking for the at the delta.
Okay. So yeah, exactly. So you mentioned a 50-cent delta the last time, right? Uh-huh. So if you wanted to buy somewhere around a 50-cent delta, this one right here is your 50-cent delta, right? What's up, bud? Okay. I see you. So this one right here is your 50-cent delta if you want to do a call position, correct?
Right.
Okay. Now.
But what does so like for the call position, it says 5.90. How much is that? Okay, so that's a great question. 2 ways you can find out, right? First way you can find out is doing this. Click right here on the ask price. Say if you want to buy one contract, click confirm, and you see right there it pops up. It's $590 that I'm spending. Okay? Okay. You see that? Yes. Now, the second way for you to do it is literally take this $590 right here. You saw that? That $590 right there, and times it by 100. Because you're buying one contract equals 100 shares. And this price is $5.90 per share. So you take that $5.90 times it by 100. Make sense?
Can I say something?
Yep, go ahead.
So, I don't know. I know some people, I'm a learner by something that will trigger like a memory.
Yeah, that's yeah, definitely. Because if you move it 2 places to the right, that's $5.90. Yeah.
Right.
Yep. So yeah, if you're buying 100 shares, that's absolutely correct. If you're buying for the 100 shares, yes, that works. For the 100 shares, one contract, yes. That works. Okay, so that's another way you can look at it. So that's how you know how much you're spending. But if you, like I said, if you don't want to do the math, just really come there. However many contracts, you buy 10 contracts, it pulls up right here how much you're going to be spending. $5,900. Okay. All right. Now, that part now. Okay. Now from here, what's your next point of confrontation?
Okay, so I still want to know how these Greek things are affecting the price.
Got you.
But if I put this on, if I buy, say, two contracts, well, when I tried to do it and I tried to change, I heard somebody say to GTC, and
Mm-hmm.
it told me I couldn't do that with a market thing. So I don't think I did that right.
I think that's just on
But
paper money. So on paper money, I don't think you can do the good GTC. I think you can only do
okay,
whatever. I think whatever is there right now. You only can do that day. You only can do day. You can't do GTC on paper. I think you can only do day. So that's why you couldn't move that over, if I'm not
well,
mistaken.
that helps explain that.
Mm-hmm.
And so, how do I know? How do I then go in if I to set like my target and my stop loss?
Yep, got you. So with the Greeks, for example, you said the Greeks. How does it affect everything with the Greeks, right? So what I want you to.
They were talking about it on the class last night with futures,
Mm-hmm.
and they were saying how they shouldn't be penalized with something when it's because of the Greek or something like
Yep.
that.
So think about this with the Greek. So the most important Greek we worry about is the delta. Okay. The theta we don't really care about. I personally say we don't care about the thetas because if you buy a far out contract, the thetas doesn't matter. Okay, because the theta basically tells you how long your contract is going to last as far as before it breaks down. Go ahead. Go ahead, Joseph.
Can I add in on that, Chris?
Yep. Go ahead.
So I know a lot of people, especially the new people, gonna be most likely trading weeklies. So when you trading your weeklies, you want to check your theta because you don't want your theta to be higher than your delta. It's gonna be very hard for you to make money. This is why Chris always kind of eliminated by saying buy as much time as you can afford. Because if you have time on your contract, unless it's just like a super volatile ticker, your theta will be less than your delta. It will be easier for you to accumulate money versus your theta, which is your time decay eating away at your contract.
Good stuff. And then and I can break it down to you. So what and also Miss Iola said you can do GTC on paper trade. I didn't know that. So you can do GTC on paper trade.
I probably messed it all up.
No problem. No problem whatsoever. Now, so let's keep focused, keep going on. So the next thing is this. So when it comes down to your theta and your delta, the delta tells you how much money you're going to make per dollar made. Okay? So with this 51-cent delta, it's basically saying every dollar that the stock goes up, I make 51 cents. Okay? So if the stock goes up $10, you make at least $500. Hypothetically, right? It can be give or take a few dollars.
Say that again.
So right here, if I have this contract that has a delta that's 51-cent delta, okay? A delta basically saying that's how much money you're going to make per dollar made. So if the stock goes up for every dollar the stock goes up, you get 51 cents, okay? So if the stock happens to go up $10, so if Apple goes from 209 to 219, you would make $500. Or somewhat give or take. Exactly. Now, say for example, that delta was a 60 cents. You would make roughly around $600 per if it goes up $10. Now, you would make more than that because the stock is going up and your delta goes up as well. You're rewarded if the stock goes in the direction you want it to go. So if the stock starts at 209, it goes to 210, 211, 212. Your delta is going to change from 0.51 to 0.53, 0.55, 0.56, 0.57, 0.66, and so on and so on. Okay? Does that make sense?
It does.
Okay. Now, say, for example, you're in a call position and the stock doesn't go up, it goes down. Now your delta is going to start to decrease. It's going to go from 51 to 49, 47, 45, 43, and so on. It starts going down. Okay?
So what does it mean when I see like a delta that said like negative 0.28?
Negative.
It was red and it said negative 0.28.
Negative 0.28. I'm not sure. Was that a put or a call? Yeah,
Okay, so
yeah.
just stay around the 50. Starting out, just stay around 50.
So you can stay around 50, but I want you to do is I want you to go back into so now that you understand what I just you have an understanding of what I just said about the delta, correct?
Yes,
So what I want you to do now is I want you to go back into the course and watch the video how to trade. I think it's called how to make more money investing less, something like that.
Okay, yeah. Okay.
Go watch that video, and now it's going to make sense to you because I just broke it down to you I just broke this part down to you. So now when you watch that video, you're gonna be like, oh, that's what he's talking about. Okay?
Okay.
Right.
Okay.
Now, from this, so let's do this. Now I don't want to overload you. Let's stop right there. Okay? So if you do have time tonight, watch that video tonight and then come back and say, okay, I understand that part. All right. And then what we'll do to help you out, then what we'll do is we'll take the next part. We'll say, okay, now let's go into the process of doing breaking down the stop losses and all that stuff for you. Because I don't want to overwhelm you with just right now. Let's stop right there. And then we'll come back after you watch that video and you have a better understanding of, okay, what I'm buying in, why I'm buying in right here, how much money I'm spending, what buttons I'm pushing to buy in, all that stuff. And then we'll proceed. Sounds like a plan?
It sounds like a plan. Thank you, everybody. I'm sorry to take up so much time.
Oh no, listen. Don't ever say that again, okay? Don't ever say you took up too much time again. Don't ever say you sorry. Cause listen, somebody else on here had that exact same question. Okay?
I sure did, so thank you for asking.
So did I. Thank you so much.
That's good. I love it. That's good.
Me as well.
Me too.
So that's so and
I
that
got another question about this chart right here because when we were in class with JT and she was watching the videos in the course, and I don't remember exactly which video it was, but
it does. I may have been on a stock that has low volume farther out in the money just for that example. But yes, no, she's absolutely correct. You want to focus on high open interest and high volume. Okay? So you want to focus on high volume and high open interest. Yes, ma'am.
And that matters because when you go to sell, if there's nobody to sell that contract to, you're gonna be stuck in that position.
Yep. And when the stock and even that's the most important thing. And the next thing is, say for example, you win a trade that it doesn't have a lot of open interest, a lot of volume. When you end that trade and the stock may move up $3, but your money doesn't move. So now you're like, man, the stock moved up $3, but my money didn't move really. It barely moved because your money has to move off of somebody buying that particular contract. So you have to think about if you in a position and you got 10 contracts, and if somebody buys in at if say your mark price is 1.3, somebody buys in at 1.5, now the stock prices your position is going to jump because now the last buy-in price is 1.5. So now your contracts is priced at that 1.5, right?
Yeah, the value of your contract goes up. It goes to the bid part.
Exactly.
It's kind of dope. Yeah.
Exactly. Okay. So yes, a lot of open interest, a lot of volume. Great question. Was that Tiara? I think that was Tiara. Okay. Good question. Good question. I think we got Miss Teresa. You got a question, Miss Teresa?
Yes, Chris, one more question.
Okay.
With active trader,
Mm-hmm.
how to get in and out of the trades quickly,
Mm-hmm.
and how do I set it up so that it's programmed for I guess, to get to that screen again, where I can get in and out the trades quickly.
You mean like so
I've been doing it, and if you do it quickly, you can't see the money you're spending, correct?
Great question. So first, I think your first question. So are you saying with your first question, how do you when you set up active trader, how do you keep Active Trader on your screen at all times? Basically, that's what you're saying? Every time you open up your laptop? Is that what you're saying?
No.
Okay.
No.
So what?
I guess I'm asking, how do I set it up so that I can get in and out of my trades quickly?
Got you. All right, so follow me right quick, okay? So on Active Trader, first thing first, what you're gonna do is right here where it says on demand, you're gonna come down here, hit this box, and you're gonna open up, hit 2 boxes, and you're gonna see a box pull up. It's very important to make sure you have this box right here that's open. You see that box? Okay, and everybody, I want everybody to focus on this because this is very important, especially for new people, okay? You see this box right here, right? If you do not see a box, but you see everything else, that means you've done it wrong. That means you came over here to the right side right here and you just hit Active Trader. Okay? We don't want to do that. We want that to be gone. We want to come right here and then that box is right there. Okay? Next thing we want to do is we say, okay, I want to get into Apple. So let me go over here and let me find a contract that I want to buy. Okay? So say I want to buy this same, we've been talking about this 51-cent contract. I come over here, I right click on that particular one, I hit copy. Okay? When I hit copy, am I recording this? I should be recording. Hopefully it's recording. Yeah, it's recording. Okay, sweet. Okay, I come over here, back to Active Trader. 1 second. And I copy, I paste it, Control V, into that particular area right there. Okay, y'all see that? Now, there's also another way you can do it. Okay, you see this link right here? Say, for example, I make that link a gold 8. Okay, I make that link a gold 8, right? If I come over here to Apple, and this same one I want to choose, I right click, and I come down here to the bottom where it says send, and I send it to that gold 8, or that brown 8. And I click right there.
Sorry, Chris, so where did you get Apple? I didn't see where you said come on inside and then select Apple.
Oh, well, I'm just on Apple stock already. That's all. I'm just on Apple stock.
Okay.
Yeah, I'm on Apple stock. So I come right here. I'm on Apple stock. I right click. I go down here to the bottom where it says send. And where it says send, I just select the same link, that 8 brown. Click right there. And when I come over here on Active Trader, now that contract is over there. Okay? So that's another way you can do it to get it over there. Okay? So either way, copy and paste it. I normally copy and paste because a few years ago I had issues with the sending thing and I just stopped doing it after I had those issues. So I just copy and paste. Okay? Next thing what you want to do is you want to go here to this configure button. Hit that configure button right there. Grab your quantity, move it up. Grab your auto send and off, move it up. Okay, I normally have mine in the top 4. Then hit OK. Then the last thing I do is I come right here to this small little settings wheel where it says customize. Right click, hit customize, and I add in P&L open. And then I hit OK. Okay, so now I have everything set up. Right now I have everything set up as far as my Active Trader. Okay. Now your next question, so now I can get in fast, get out fast. If I want to say, hey, I want to go down here and buy this particular one, I can just right click. Let me see 1 second. Auto send. I right click, boom. The trade is set. Okay. If I want to get into that particular strike, that particular mark price. Okay. Now to your question, let me stop right there, Ms. Teresa. Does that make sense so far?
Yes.
Okay. Now your second question was, how do you see how much money you're spending? So I normally have auto send checked, but if you uncheck auto send and say, for example, I hit buy market, this pulls up and tells me how much I'm spending.
Okay, so I can see it.
Yep. Just make sure auto send is not checked. Okay. And now once again.
Chris,
Yep. Go ahead, bro.
She also asked, how she keep it that way. You can show her how to save a layout.
Oh, yep.
So it'll always be on the Active Trader layout that you just set up.
Yep. So if you want, appreciate it, bro. So if you want to say, how do I keep this here at all times? Just go here to setup and then go to your workspace and save workspace as, and then say, for example, you want to say, I can save it as CJ Active Trader and then hit save. Okay. So now say, for example, it goes away. right? And I come back to my whole screen is messed up. I hit setup, go down here to CJ Active Trader, and then my screen will go away for a minute, then it come back, booyah, there it goes.
Awesome. Thank you, guys.
No problem. Great question. Great question. All right. Any other question? We'll take one more question. Do we have one more question? Fire away, Dre.
How you doing?
I'm good. How about yourself, sir?
All right. New to this, and I'm still going through the course,
Mm-hmm.
but I'm trying to figure out. I work 7 a.m. Central Time to 3:30. I'm trying to figure out. I believe swing trading will be best for me, but how would I achieve that during that time frame? I barely can get on my phone and work.
Yep.
That's why I'm trying to figure out how I'm gonna do this.
So let me ask you a question right quick. So when you think about swing trading, what does that mean to you right now?
I believe that means just holding it for overnight, but I personally would try to hold it longer.
Mm-hmm.
So I don't have to worry about keep going back looking at it, just to try to let it go on leaps or something, swing
Gotcha.
or leap trading.
Yep. Exactly. No, you're on the right path. So what I want you to think about is this. So if you're attempting to say, hey, I'm at work, okay, your moments or your time is going to probably be when you get home. I don't know if you have a family or not, but the family they give you a moment. Okay, you see what I'm saying?
Yeah.
So what your
Babies.
oh yeah, you got 2 babies. Yeah, I got 5 kids, man. I feel you, brother. All right. So your moment is going to be, and it's not going to take a long time. When you first start off, it may take you a little bit of time because you're trying to learn everything. But as you get used to it, what you're going to start doing is every night you come home, you're going to come home and say, okay, I look at 3 or 4 stocks. You're going to break down all three or four of those stocks in a matter of 5 minutes. You'll be able to say, okay, let me go to the one. Let me go see what happened today. Did the market go up? Did it go down? Okay, it went down. Okay, let me see. Did it come to one of my support levels that I have drawn? Did it come to a demand zone that I have? Is the stock consolidating? Right? And you're gonna learn, and everything I'm saying right now, I know you're new. I think this is your first class, Drake. But when you start going through the course, you're gonna start understanding, okay, supply and demand, support and resistance, and so on and so on and so on. And you're like, oh, okay. So every night, give yourself 5, 10, 15, 20 minutes to sit down at your computer, go over what you're looking at. And if you say, okay, right now I see the stock is consolidating, it's decision-making time on a 4-hour time frame or the 1 year, 1 day time frame, this may be a nice entry point for a call position. Okay? And then from there you can say, let me put an order in. If the stock comes to this certain level, let me put an order in to get in on a 3-month swing trade, 6-month swing trade. Your bread and butter, where you're going to make your money at, where you're going to pay your mortgage payment at, and all of those good things, when you find a stock at a high probability buy area. So while you're going through the course, I want you to think everything you think about and everything I teach you in that course. I want you to think about, okay, I want to get into a play that I can get in and I don't have to do anything, and I can get out within a couple of weeks. I get out in a couple of days. I get out in a couple of months. I just need to make sure I understand where's the right entry point. Okay.
Okay. Yes, sir.
And that's how you're gonna focus. That's how you're gonna focus on it. But as you go through the course some more, this stuff it'll start coming. You start understanding a little bit more what I mean when I say, hey, he said go to the 1 year, 1 day time frame, or go to the 4-hour time frame, and see if we're at a demand zone, see if we're at a support level, see if we're at resistance, and all those things. Okay.
Okay. So when you said, I do the charting or whatever, I look over and you said, okay, I'm gonna set it for this price. So what they were talking about earlier, would it be I can set it for like an automatic, like auto trading? Okay.
Yep, you can set it for automatic. You can leave before you leave the house in the morning. You can say, okay, I know let me see what happened pre-market. Okay, boom, pre-market is still ahead of where I want to get in at. Let me set a position right here. Boom, set your position, and then you can go do whatever you got to do, and then you're good to go. And then once it comes down to that level, it'll automatically put you in. You can automatically have a stop loss set as well. All of those things in place for you. You're good to go. You get an alert on your phone saying, hey, you in the trade.
Okay, all that's in the course?
Yep. All that stuff in the course. Yes, sir. It's all in there. Yes, sir.
All right, cool. Thank you.
No problem. And if you have any questions, Dre, let me know, okay?
Hey Dre, what you gonna want to do is practice with that, because like Chris said, you
find you your 3 or 4 tickets that you're super interested in, and if you got some time, practice with that on paper trading. So where you could be like, okay, I'm gonna practice my swing. If it comes to this level, I'm gonna preset me an order to get in and see. Give yourself enough time first and foremost on the contract.
Yep.
And then you want to see how it plays out for you. Because what's going to allow you to really thrive at that is trusting yourself, trusting your analysis. I'm saying, I know how, my support and the resistance levels work. I know how my supply and demand levels work. I noticed this pattern that when it comes to here, it usually goes to here. That's how you're going to make the most and capitalize on moves and stuff like that. But without you having that confidence or that trust in yourself, you're going to be like, oh, man, I knew I should have got it. I've seen this before, but I didn't do it. So, you just want to kind of build the confidence with yourself, and it'll get easier.
Yep, absolutely.
Okay, all right,
absolutely.
Cool. Thank you.
No problem. Let's see. Any other questions before we transition? Any questions? Any other questions? All right, everybody. So everybody, especially if you're new, this is what we do every before every class. First hour, we just have a lot of Q&A sessions. You ask questions about anything you've been going through in the course, anything you might just be struggling with. Okay. So then the second part, what we do is start doing some technical analysis, breaking down the market, kind of giving you understanding everything. So we had an amazing drop down. Like, I was literally watching this thing fall overnight, and then when I woke up this morning, I was just like, good geesh Louise, right? She's just falling down, right? So the thing is this, everybody, what happened? Okay? So first thing first, what's happening is this. We talk
rumors of wars.
Right, a lot, right? So what the first thing is this. Everybody, VIX. It's called the VIX. Everybody, the VIX is called this is what we call our fear indicator, right? That's what I call it, our fear indicator. It tells us if the market is fearful or not. Okay? The average VIX for the past year, look at this chart now, has been around $14. $14. Okay? That's on average. If we go back a whole year, from yet a year, August 7th, it was at $15.63. And then right before a couple of days ago, it was at like $15, $14. So on average, it's anywhere from like $12 to $14. And we always say, if it gets to 16, that means the fear is starting to creep up. If it goes to 18, it means people are really scared. So, hold on one second. Hey, Sethio, go out there with mommy, buddy. Yep. Asha, open the door for Sethio. Close the door, Sethio. Thank you, bud. All right, so we say if it hits 16, the market's getting a little fearful, the market probably will start falling down some, right? Or the whole market start falling down some. If you get to 18, man, people really are scared. Okay? If it gets to, one second. Thank you. If it gets to 20, man, the whole market's probably scared. Everybody, this thing went to 65. 65. Yesterday, when we woke up this morning, it was 65. Look at this. This is how scared the market was from 3:15 in the morning. It went from 21 to 65 at 8:35 in the morning, everybody. That's crazy. The last time the fear has been that bad was right here. It was at 85, and that was during COVID. So everybody, what happened, basically, it was almost a pandemic fear happening in the market. Pandemic levels almost. It was at 85. That's what the fear rate went to. Okay? Now, everybody, the VIX, VIX, if the VIX is going up, that means SPY SPY is doing what? Going down. Okay? That means SPY is going down. The VIX does the complete opposite of SPY until it gets to like $12 or $11. When it gets to $12, $11, it just consolidates at 12 or 11 for the most part, and then you can still see SPY going up. Okay, so that's crazy fear, everybody. This happened when people was in the hospital with COVID and the world shut down. The VIX was at 85. Today, the VIX went to 65. The world didn't shut down. People are not dying over COVID and things of that nature. I lost loved ones in COVID too, but there's no pandemic going on, and the fear level got almost to $70. Everybody, that is a recipe of fear. What happened? What's going on? First thing is this, everybody. Friday, the data came out, and things have changed now. It used to be bad news when it came to like the job data and all that stuff. Bad news was good for the market. Okay? Now, bad news is bad for the market. Okay? Now the market feels like the market does not trust Jerome Powell once again. Okay? If I send you a Jerome Powell a picture, that means Lucy got some explaining to do. Okay? The market feels as if Jerome Powell has waited too long to cut rates, and believe that he has a stronghold on people. And remember, we had this conversation on Monday that people believe that the people's savings account are being emptied out, right? Because prices and everything is so high. People can't afford rent. People are not building homes. People are not getting mortgages because the rate's so high. Okay? So people are fearful that the economy is about to go down, baby, and a recession, the R word, is about to happen. And it's all because they feel as if it's all because of Jerome Powell. Okay? So when this started to happen, that's where that massive sell-off took place. But then something else happened. Then we had... Yep, that's the other thing. Something else before that happened though. What is it? Was it Japan? Was it Japan?
Yeah, the Nikkei.
The Nikkei. Yep.
Japanese.
Yep. Yeah. The Japanese. They raised interest rates. So boom, everybody. Remember something that happened last year, July. Last year, something happened about inflation. I forgot the two countries in July last year. I'm gonna find it. I'm gonna tell you what it is. I believe they raised rates again last year. And then what happened to the market? The market fell all the way from July all the way to October 31st. And then the market bounced and went crazy. Okay? So last year around the same time, a country either raised rates. I think it was two countries raised rates as well. I think it was Canada maybe, and I don't know. I gotta go back in. Don't hold me on that. Okay? But they raised rates. This time, rates was raised, and what does that do to our market? Now we are fearful. Because, whoa, they're raising rates. If it happened to them, it can happen to who? It can happen to us. Okay? Then you get news that Mr. Buffett is scaring the entire world because he sold half his stake in Apple. And he has a lot of cash on the side now. Okay? Now you starting to see people just sell. Panic sell. Everybody, this is what transpired. This is what happened that caused this huge fall down overnight yesterday. Okay? A lot of fear in the market. So what do we do now? First thing first, everybody remember, we make money if the market goes up, and we make money if the market goes down. We literally care. We don't care. Okay? If you're in long positions, like we said last week, start hedging some of your plays. If you're long on certain stocks, hedge some of those plays. Find some open that. Yes, okay. Did it open? No. Start hedging some of your plays. Find some different positions to get into put positions if you're in calls, right? If the market starts falling down, so you don't lose as much. Okay? If you're not in calls and you're just out, you're in here, you're getting in and out, in and out, in and out, nothing has changed for you. Absolutely nothing has changed for you. The only thing you have to do now is do everything you've been doing but the only thing I do extra is look to the left. Okay? Look to the left. Chris, what do you mean when you say look to the left? Look to the left at the chart the last time the stock price was at this level. Okay? If the stock price is at this level a year ago, where do you think the buyers and the sellers are going? Right back to the exact same place they were at a year ago. If it was 4 years ago, the buyers and sellers are going right back to the exact same place. Okay? Moments like this, if you're someone that believes the market is going to go up, okay, and we're going to talk about why I believe the market's going to go up. But if you're somebody who believes the market is going to go up by the end of the year, these are the opportunities you wait for. These are the opportunities that you literally wait for to be able to buy in when every single home run stock, every mega cap, every stock that you love is on a discounted price. Okay? This is the moments that you wait for. Okay? Now,
you know what's so crazy, Chris?
What's going on?
Because everybody be waiting for these discounts, but they forget how it gotta go on discount.
Right. Exactly. And that's the problem though, right? And this is the second problem. When a stock goes on discount, people are still afraid to get in because they feel like it can go down further. So people say, no, I'm not going to get in right now. I'm waiting till it go down a little bit further, which is perfectly fine. But you don't want to miss the boat. So personally, we're going to get into it in a moment. What's my thoughts? Do we think it's going to continue to go down? Do we think it's going to bounce, go up? What are my thoughts? We're going to break that down as well. My thoughts have not changed from the last time for the most part, but we're going to talk about it. Everybody right here, this is the Fear and Greed Index. Okay? The Fear and Greed Index. Okay? What this index does, everybody, and everybody you all should be, just keep this in your, keep this, you can just Google Fear and Greed Index and it'll pop up for you. But it tells you where the market is currently at. Okay? The first part of the year, this index was right here in the greed area. Borderline extreme greed, right? Now we're at extreme fear. Okay? Right now we're at extreme fear, everyone. This is where the market is currently at. Extreme fear. My personal opinion, if you're someone who believes the market is going to go be up at all-time highs by the end of the year, that's my thoughts. That's my thoughts. Extreme fear is a place for buying opportunities. Okay? Because now you have to go from extreme fear to neutral to greed. In order for it to do that, the market has to start doing what? Going back up. Now, if I was someone who was bearish and thought the market was going to end down, extreme fear means, okay, we might have to have a little small bounce and go back up and then look for more puts. But I'm on the bullish side for the end of the year. Okay? I'm on the bullish side. All right, let me stop right there right quick. Any questions related to this Fear and Greed Index? Any questions? Okay? All right, good stuff. Now, with that being said, everybody, let's take a look right here at this stock right quick. Okay? Let's take a look at Amazon. If we take a look at Amazon, everybody, matter of fact, let me do it on Trading View. Yeah. Do it on Trading View. Okay. Go to Amazon. Today time frame. All right. Watch this, everybody. What has happened? Let's see. What has happened, everybody? Take a look right here. This is Amazon stock. Take a look at this stock right here. What is that white line I drew? That's a trend line, right?
The bullish trend.
The bullish trend line, exactly.
And so did it just come down and hit support?
Ding, 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 ding. It came down and hit support. Everybody, watch this. Oh, a second. Look at this, everybody. If we're looking at this solely from a technical standpoint of view, there has been zero, absolutely zero internal damage to Amazon. Do you all see that? So, Chris, what do you mean when you say internal damage? There was no break of any type of, let me try to put this word. So when I say internal damage, it's like this. Say, for example, you're running a race and you have to finish that race within 10 minutes. And you start off on a forward-off sprint and then you start walking for a little bit. And you walk for like 3 or 4 minutes. But you still are on track to finish your race at 10 minutes. So just because you walked for 3 or 4 minutes, you're still on track to get to the finish line within those 10 minutes. So there was no damage done by you starting to what? Walk. Everybody, right now, there's been no damage done to Amazon at all. Amazon fell right down to a strong resistance support area off the trend line. And this trend line has been intact since January of 2023 on the day time frame. And let's look at how many times it was hit. Started right here, went up, came back down. Boom, hit right here. Kind of dribbled right there, went up, came back down. Boom, bounced off of it, went up and did not look back. From September 2023, October 2023, did not come back. And just now, it finally came right back down to here, everybody. You cannot make this stuff up. And look where it hit that trend line. It hasn't been on this trend line since the last rally that started October 31st of 2023, last year's Halloween. Very, very interesting story. Whenever pain is going on in the stock market, everybody, sometimes the only thing you have to do is zoom out. Take a step back. Look at it from a larger time frame. Okay? So if it's me, what I would be doing is I would be going to find the best stocks that I want to trade. And what I would be doing is, let me see if we had any internal damage. Did we break the structure? Did we break any type of trend, upward trend lines or anything of that nature? What do we have going on right now? Okay? Y'all with me?
Hey, Chris.
Yes, sir.
Is price tracked in a channel? Is that what that is? We have the
Yep, there you go.
Okay.
Yep. It's priced in a channel and it's in an upward channel. Now, this is the question though. If it breaks this level right here, it's over. The play is over. Once we break this trend line and close beneath this trend line, it's pretty much over. We will come back and retest this level, right? We will come back and retest this level and then possibly fall back down if we stay beneath it, if we break beneath it and close beneath it, okay? But as you can see, We came right down here to this level, everybody. This is the 1 year, 1 day time. This is the 1 day time frame, and we bounced right off of it. That's beautiful. No internal damage. Okay, now let's take a look at SPY and see if SPY had internal damage. I think SPY did have internal damage though. Let's see. 1 year, 1 day time frame. I think it had a tad bit of internal damage. SPY did, for the most part.
Yeah, we broke down below the 100.
We beneath the 100.
Yep, beneath the 100, and not too far from the 200. If we bounce back off the 100, coming back down. Yeah, we broke the 100 day.
Yep. And with SPY, as far as a trend line, we do have some room. We could potentially go down further on SPY as far as a trend line. Okay. So we do have some potential room, as you can see right here. Hit, came back, bounced off, came to it, bounced up, and we do have some room to potentially come back down a little bit further. Okay, potentially on SPY, that may happen. Okay, so we're not out of the dog. Go ahead.
What do you mean when he says we hit the 100?
The 100 EMA.
Oh.
Yep, the 100 EMA. So you know how we got the 9 EMA, 21 EMA, the 200?
Yes.
Also, he's using the 100 EMA as well.
Okay.
Mm-hmm.
Thank you.
Yep, no worries. And then right here, when he says we're close to the 200 on SPY, let's take a look at it right quick. Boom, boom, boom. On the 1 year, 1 day time frame, we're right here at the 200 EMA. Remember, each EMA is a level of what? Support and resistance. Okay? A level of support and resistance. All right? Now, if you remember last Monday when we was on the call, we talked about SPX, right? And we said if SPX on that push-up, if it breaks, let's see, let's go to the 1 hour time frame. So we said if SPX, this is on last Monday, I want to say. So last Monday was what? Thursday, Wednesday, 30th. I think it's right here. Was this it? It was the 26th, maybe? 29th. So right here on Monday, we stated if this stock, right, breaks the 55.25 level. No, it's right over here. I'm sorry, not it's over here. Here we go. Right here. If it breaks the 55.25 level, it could go breaks and hold that 55.25 level. It can go up to that 5,600. Okay. Oh, you can't see my screen. Okay, gotcha. My bad. I was just going. Appreciate it. All right, let's see. But you always able to see the Amazon thing I was showing, right?
Yeah.
Okay, cool. All right, here we go. So right here on Monday, we gave 3 scenarios. First scenario, we said, well, just one of the scenarios we stated, if it breaks 55.25 on 55.25 on SPX, we can see it possibly go to 5,600. Okay, and then if it continues to move at 5,600, we can see it go to 5,700. Okay, that's one scenario. 2 scenarios. The other scenario was if it goes to 55.25, right? 55.25, and it rejects it. What's wrong, buddy? You hurt yourself? You was being bad? Sure you wasn't. If it goes to 55.25, if you're gonna be down here, you gotta be quiet now. 55.25. If it breaks above it, or if it rejects that 55.25, then we can see what? A lower low, a new low. So right here, it broke through that 55.25, and it came up here, and it started to reject that 55.50 area, and then it came back to retest 55.25, and it fell through. And ever since then, you see we made a new low, and now we went all the way from 55. Listen to what I'm saying. 55.25 down to $51.19. That's almost a $400 drop down, everybody. That's massive. Okay? So we've made that low. Now the question is, have we bottomed out at this particular low yet? Okay, have we bottomed out? What I mean when I say bottomed out, can we go lower? The answer to that question is yes, we can possibly go lower. Okay? We possibly can go lower. We do not want to see a break of that 5100, but it's possible. That'd be real scary for the market. Okay, that means fear is driving us crazy. Okay, this is SPX, everybody. So when you say 5100, we want to see it came out of 5119 and bounced, but we could potentially go to 5100. Okay, now everyone, right now, when you're doing your technical analysis, everybody, right now we see the market is right around here, right? Let's say we're at, I'm gonna go to SPY. So right now, the market is currently sitting at, it closed at what? 517.38. So if the market closed at 517.38, what should I be doing when I'm looking at my technical analysis? I'm looking at supply, support and resistance levels. What should I possibly be doing, everybody? See if anybody knows. No one knows? What should I be doing if I'm looking at my support and resistance levels?
Marking your high of the day and low of the day.
Yeah, so
Starting your high and low of the day.
That's true too, but not right. So previous, like right now, if I'm overnight, for example, this is something that you would be doing every night, Dre. Okay, so what we would do is, if we know the stock is at 517.38, what's our radius for SPY? What's our radius for SPY?
$10. $10 radius.
There you go.
$10 radius.
$10 radius. So what I'm looking for right here is this. We at 517.38. So I'm gonna go up to 527. Boom. And down to 507. Funny, right? Right here, 507. Crazy. Okay. 507. And I'm going to change these lines to white. So now what am I doing now? Now I'm looking to chart everything that's inside of these white lines. Because right now, the only thing that I care about is this $10 radius. Only thing I care about is this $10 radius on SPY right now. Okay? Go to the side. That's what I care about. So what I'm going to look for is, now I'm going to go back to this 1 year, 1 day time frame. And I'm going to look for everything that's inside of these white levels. Okay? So we look right here. Boom. So what I'm getting right now is I'm going to get the data and find out where my buyers and where my sellers are when it comes to when the stock is at this particular level. So the first thing that stands out to me is right here. That's a resistance area. This 524.31 is resistance for me. You see, it couldn't break right here. Let me see. Can't break right, couldn't break right there, couldn't break right there, couldn't break right there, couldn't break right there. Right here, it finally broke through. Then it was support, support, resistance, support, support, support. So I know for a fact that's a level of resistance and support for me. 524.31. Okay? Then I say, okay, what else do I see? If you guys see any levels that I don't see, point them out. What else do I see? I see some action right here, right around this area. Okay? I see resistance right here, resistance right here, resistance right there, resistance right there. We broke through, came back down here, did some support, 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 and resistance. Come right here, resistance, resistance. So we know 517.23 is a level of support or resistance. And where did the market happen to close today? 517.38. We look right here, it pushed down right here. The buyers bought in right there, that 517, 518 area. You all see what I'm doing right now?
Yes,
Okay. So what I'm finding levels inside of this particular area. And I know it's more in there, but I'm gonna drill down to the 4-hour time frame. Boom, 4-hour time frame. I'm doing the exact same thing. I'm finding levels that's inside of this white box. Things that's sticking out to me. I'm gonna do a section by section. Do this section right here first. Okay, so if I'm right here, do I see anything major right here? Okay, if I look right here, resistance for a couple hours, then come right here, resistance for some hours, right here, support right here, resistance and support. Right here, some more action right there, small, but it's some action. Hit right there, couldn't hit, rejected and fell all the way down. I'm just going through drawing these levels now. And as you can see, as you move over, you can still see resistance, support, resistance. So if I come down here and say, okay, that's enough for me right now, right? And now I come back to the actual, let's go to the 15-minute chart. So now my 15-minute chart, look what I have right here. I have a whole lot of lines. Okay, I have a lot of lines. But guess what? Let's see if these lines that I drew from previous experiences are still true to this day. Let's take a look and see. Let's start right here in the white lines. And look, and this is just showing you, this is just literally showing you how the buyers and the sellers go back to the same spot. Everybody, when the stock came through this white line right here, boom, we in the white line. When it fell down, what did it fall down to, everybody? Right here to this level right here. We drew this level, everybody, based upon what? Based upon how long ago? We drew this level based upon, go to the 4-hour. Based upon data from February to May. Okay? So this data based almost 6 months ago, basically. Okay? We got these lines from 6 months ago. And look how they're holding tight right now. Take a look. So boom, it fell down and came right to this level. It finally broke through. When it broke through, where did it fall down to, everybody? It fell right down to this level right here. Crazy, right? When it shot up, everybody, where did it shoot up to, everybody? When it fell back down right here, where did it stop at again? Broke through, boom. Stopped right there for a second, then boom, look where it fell down to some more. Right here, and it's set there on these lines. Everybody, we drew these levels. We got these levels from 4 to 5 months ago. And the buyers and the sellers went right back to the exact same place they were at 4 to 5 months ago when they got here this time. When it came down here, everybody, the buyers bought in right here. 1 second. Today, the buyers bought in at this support level, bounced up here, boom, 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 broke through this resistance, came right here, set at this resistance for a while, set there, boom, broke above, and look where it went, everybody, right back to this resistance. Then it rejected and fell right back here. And right now we kind of hanging around here and we pushing up and we're looking to go back up and test this 524 area. So everybody, when I say what you have to do is when the market's falling or whatever it's doing, just look to the left. That's what I mean, everybody. Just look to the left. We're going to start calling it Beyonce. To the left, to the left. Anytime the market falls and we say what to do next, we're just going to say Beyonce. That means to the left, to the left. Y'all follow me so far? Y'all with me? Miss Teresa, you got a question out from last time?
No, that must have been from last time.
Okay, no worries. All right. Any question before we keep moving? Okay, so the question, What is the expectation for tomorrow? What do we expect for tomorrow? First thing first, everyone. First thing first is this. We have to break 520, that 524-ish, 30-ish area. Okay? Right around that 524, 30 area. In other words, we have to break this resistance level right here. We attempted to break this level 3 times and we failed 2 times. We came right here. The first time we failed, pushed down here to 509. Okay? And I want somebody, hopefully somebody see what I'm about to say right now. Hopefully somebody can see exactly what I'm about to say right now. Watch this, everybody. We rejected that level right here, this 524 level right here. We fell down here. Next time we came up here and retested this level again. And what?
We made a higher low right here.
There we go. Who that shot? That Shadrach?
So it might give us some potential. We got to see what's going on in the morning if the flash too.
Exactly.
Don't come in right away. Come back. It's just basically market structure.
Yep. There you go. So boom, we pushed up right here. And then we rejected and we came right here. But like Shadrach just said, what's different? What happened? What happened was we made, the last time we rejected this level, the stock fell all the way down here. And the buyers bought in down here. And the buyers pushed the stock all the way up here. Right? Then next thing you know, the stock rejected again, and it fell down right here. But this time, the buyers bought in right here. They bought in $5 higher than they bought in the first time. You can't see my chart? Oh, no, you can see it. That was last time. Yep. So now we bought in $5 higher, and now what is it doing? It's pushing up. It's right now, SPY is up almost $5 for the overnight. So if you're in a SPY swing call right now, congratulations if it stays up in the morning. You're going to be up a lot of money. But boom, it pushed up, and it's going back to retest this level. Retest this level. So what are we looking for tomorrow? First thing first, we have to see it when we wake up tomorrow morning. Are we above or beneath that 524.31? If we are above 524.31, we want to wait and see if it's what's going to happen when it comes back and retest that level. Okay? We have to see what's going to happen when we retest this 524.31 level. Okay? If we are beneath this level, we have to be patient and wait for the stock to break that 524.31 area. Okay? If we break 524.31, we should have a straight path to 528. Break of 524.31 takes us right here to this white line right here. And the reason why that white line is important, when we broke through here right there, we attempted to come up right around here to break through. So it's actually probably a little bit smaller, probably like right at 527 actually. So we have to see if we can break that 527 area. Okay? So these are our levels for tomorrow morning, everybody. A break of 524 takes us roughly to around 527. Okay? A break of 527 should take us right up here to 531. If we can climb that ladder back to 531 and eventually break that 531 area right up here, get to that 531, eventually break that 533 area, but we want to at least come here and touch this 530.50 area. Okay? Those are some levels for us. But what we have to remember, everyone, at every single line that I've drew, since it's 524 area, right? If we break this 524 area, we got to break this level, break this level, break this level, right? Guess who's sitting right here? You have sellers right there. You have sellers right here. And you have sellers right there. You have a lot of downward pressure pushing down on us. Okay? Everybody with me? Okay? Now, what happens if we hit that 524 and we do not break it? It's a strong possibility we're coming right back down here to 509 for a clean triple top. And what it looks like is right here. Boom, 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 boom. Right there. We'll probably start pushing right back down to 509. Okay?
How do you know that it's gonna possibly go back down to 509 from 524? Is that because it's that resistance area?
Yeah, so think about this. Think about for example, you in the weight room, right? Say if somebody's lifting weights, right? And say they're bench pressing and they're pushing up, trying to get that weight up, then eventually, no matter how hard they push, their arms just cannot push it past, get it up and lock out their arms, right? And when that bar falls back down, when your arms give out, what does it do? It falls hard on your chest, right? On your neck, your chest, the whole nine. So think about this right here as somebody trying to lift weights. Okay? Pushing that weight up, trying to lock it out. Okay, boom. Come back down right here, trying to push this weight up, and we're struggling. And we get right here to almost got it, and next thing you know, when your arms fall out, good googly moogly. Boom. Okay. It's over. Now,
I see it.
Now that's a possibility, right? But if we do fall back down and we don't go all the way down, as long as we stay above this area right here, we can still go back up there and attack that 524 area. Okay? So what I basically said, if we do reject this 524 and we stay above this, say I think this is 516, 517 area, if we stay above that area right there, we do have the possibility to go back up there and attack that 524 again. But if we break this area right here, it's definitely that we're going back to 509. So if we break that 515 areas, we definitely going back down to 509 potentially to do a double bottom or make another low. Make sense?
Thank you.
No problem. And who was that? That was Fabi, Miss Fabi. Got you. Okay. All right. Any other questions before we move forward? Any other questions? Any other questions? All right. So everyone, that's right. And that's just by itself is with support and resistance. If I go here to Trading View and I come here and I take a look at my zones. Let's put up some zones right quick. Boom, boom, boom. Okay. That's the 15-minute time frame. Go back to the daytime frame. We go to the daytime frame, everybody. The daytime frame tells us, listen, we got a demand zone there right there at 500. The daytime tells us we can possibly move down $17 more potentially and go right here to this demand zone right around here.
And Chris, you forgot to say you're taking out the low-hanging fruit. So that first target going down, that was like the low-hanging fruit if they hit it.
Oh yeah, definitely. Just taking it out. Okay. Definitely taking it. Cause we've went through so many different support levels, so many different demand zones on the way down. It's just been it's like water because of fear, right? Fear drives the market. Okay.
And Chris, even with it going, if we can't break that 524 level, even with it going down to the 509, it still may stop at those areas below that and consolidate. Correct. It may not be like a straight
Mm-hmm.
down. It may stop at those areas and consolidate and move down.
Yep.
Like, it's just not a straight.
Exactly. It may stair step down. Exactly. It may stair step down. Yep. It may not just fall hard immediately. It may just stair step its way on down, easing on down the road. Yep. Exactly. So, and one thing that concerns me that I wish I could see I wish it was showing right now. So on my screen, I use this indicator called the Knoxville divergence, right? And it shows you when momentum is slowing down and the stock is oversold. Okay, so right now, when the momentum is slowing down and the stock is oversold, it will alert me saying, "Hey, it's oversold. The momentum is slowing down. Maybe a potential reversal." Okay, Miss Iola, the way I got the $10 radius, I took the close of the day, which was 517, and I just added $10 to 517 and took away $10 from 517. So that's how I got the 507 and the 527. I put 37, didn't I? Should have been 27. I think I put 37. I don't know. Maybe no, I didn't. I put 27. Yeah, so 527 and 507. That's how I got it. Okay. So when I break down the market, everybody, I always break down SPY. I'm always breaking down SPY when I break down the market, because that's what that's S&P 500. Once again, it's the 500 largest companies. So tomorrow morning, what am I looking at? That's exactly what I'm looking at, everybody. I'm looking for what's happening around the 524 area. My first thing that I'm taking a look at when I wake up, and then if we're above 524, we go from there. Personally, what are my thoughts about the market? Do I think we have an opportunity to keep going down, or do I think we have an opportunity to go back up? I would say, as we've been saying this for months now. We said it back in June. We said we believe the first part of July was going to be very bullish. That checked out to be true. We said the second part of July was going to be bearish. That checked out to be true. Okay? And we said historically, August is what? A bearish month. Okay? So potentially what I believe we could possibly see is we could definitely get a lot of consolidation, a lot of volatility and consolidation in the month of August. Meaning some days we're going to be up, some days we'll be right back down. Some days we'll be up, some days we'll be right back down. Okay? That's possible. Very, very, very possible. Miss Abigail, what's going on?
Hi. I wanted to tell you that Iola had a question in the chat. She probably can't verbally express it. And could you please repeat the name of the indicator you shared that shows your volume is slowing down?
Oh, it's called the Knoxville divergence. Knoxville divergence. Let me matter of fact, so right here, boom, 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 Knoxville, Rob Booker, Knoxville divergence. Okay. And when you use that, everybody, you got to change some of the settings in it, though. I want you to go to, where is it? Knoxville divergence. Where is it? Oh, move that. All right, there we go. Okay. So what I want you to do is I want you to come to the Roberts Knoxville divergence and change your bars back to 30 bars back, your RSI period to 21, and your momentum period to 20. This is going to give you this is going to make it a high probability when it alerts you, it's telling you something that definitely can be something you need to pay attention to. Got it?
Thank you.
Okay.
Yep.
And Miss Iola, what was Miss Iola's question? What was it?
She was asking, why do you choose the $10 radius?
Oh, I just answered it for her. Basically, $10 radius is basically, she said, how do I get the $10 radius? Since the stock was at 517, I add $10 to the 517, give me 527, and then I subtract $10 from the 517. The reason why I use the $10 is because of the I know that SPY, I trade all the time. SPY can go up on SPY could potentially go up on a max day on a max average day $10, $6 to $7, $8, and it can go down maybe like $6 to $7, $8. That's probably going to almost max it out unless you have days like this, right? So I use that $10 radius. If I was trading SPX, I would potentially probably use almost $100 radius because I know SPX can go up 100 and go down 100. Make sense? But yes. All right, good question. Good question. Good question. Next we have, okay, no other questions there. All right. So what was I? Was I saying my thought process? My thought process, yes. So my thought process, I believe we could potentially have some consolidation, stock market up, stock market down during the month of August. Okay. During the latter part of August, okay. During the latter part of August, that's when we can potentially see a short-term bull run. Okay. This is not going to be not a run that's going to take us all the way into the just run 2 to 3 months. It can be potentially be a short-term bull run, and we can go up there and potentially take out some highs, okay, make some new highs, take it out potentially, and then we can see another push back down towards the middle or the end of September, right, which will take us into the election time frame. And then after the election, potentially we can see what the market is going to do after the election. Okay, so we are coming to a time frame when after we get out of August and go into September, where we may have a lot of consolidation up until the election. After the election, we could potentially see the bull run into the end of the year. Those are my thoughts. That's my thought process. So what does that mean, everybody? That means if, all right, not saying that, of course, something is 100%. If we do have a short-term bull run towards the end of August, beginning of September, this is an opportunity for you to get some profits back and take them. Okay, and then get prepared for a push down. Right, it probably won't be this drastic push down like we had now, unless it's some other type of fear that happens. But a push back down, and wait till the election, and then the election is going to come, and then from there we'll see which direction we can take off. Okay, those are my that's my thought process. Xavier say, how much can you tell SPY is down? So Xavier, we go right here, and I'm sure there's some type of indicator on TradingView or something. But so if we see right here that SPY's high was 565, okay, and right now we see it's down to 510. So we just kind of do the math on it, right? 10% of 565 is what, $56? So if you take $56 away from 565, you right at 5,600. So that's saying we right around like 9%, like almost like a 9% drop down, almost somewhere around there, because we've dropped down about $46 almost from the highs. $45. I'm sorry, dropped down about. No, I'm sorry, $55. We dropped down about $55 from the highs. So you just kind of do that math. Or you can do like 55 divided into 565 and they tell you the percentage as well. So that's how you do that, Xavier. But I'm sure there's like some type of stick you can pull or something like that in one of these places. I just don't know where it's at.
Yeah, Chris, it's in the drawings.
In the drawings?
So the drawings, yep, and then come down right there, that line graph, a little hand to the top.
Oh, right.
Down from the left.
Right here?
Yep. No, go up one.
The trend line?
Yep. Click on it, and then just drag it from there, and just stay there.
Oh, yeah. Yeah, it does. Yep. Oh, I shouldn't have clicked it, right? Let me go back. Right around here. And it says, yep, 9%. Yeah, there we go. 9.62%. Yep. My math was close. It was close. 20 days.
Math is excellent.
Nah, good stuff. I didn't know. I definitely never paid that no attention. Appreciate that, James. So that's beautiful. And now, since we have this up right quick, let's go ahead and do a little bit of something. Let's take a look at this last push. Let's look at this last year around the same time, around July. We had that major push down. Let's go right here. 3 year, 1 day. That's July 2020. Yeah. Look at here. What was this big push down last year? Last year we fell 10%. 10.72% last year before we bounced. Now, hypothetically speaking, say if we were mimicking what happened last year, right? And we had to fall 10.72% or whatever, right? What number does that leave us at?
500.
500? Yep, right around, a little bit higher. Right around 50, yeah, 504, 505. And that 200 level that 200 you was talking about, James. Yep, that 200 level. Okay.
Watching it like a hawk.
So hypothetically speaking, everybody, what we just did was this. Last year, around the same time, July. Matter of fact, what days was this? Because this is crazy. Because last year, me and Billy got into these AMD calls around in July. So July 16th this year, and last year it was, no, that was last year. Last year, July 16th. This year was July. Man, guys, to be more careful. Look at this. Hopefully I ain't playing tricks on me. So July 16th, we had our high. This year, we started falling down, right? Last year.
Looks the same.
Oh my gosh, this is crazy. Okay, no, not July 16th. All right, okay. I'm about to say, no, not the same day. But we kind of hit a high on July 27th and we fell down. Okay, July 27th and fell down. And then we didn't rally again, really. We had some fake push downs, right? So we had a push down right here, fake push up, and then we kind of fell down again with some lows, right? Then we had another fake little push up, and then we fell down with some lows right here, okay? And right now, how does this thing look? Looks very, very similar.
So what was the push up last year from, what was the percentage of the push up from the down?
Whew, good geesh Louise. Now who asked that, Ms. Lena? Who is that?
Yes, that was me.
That was the question right there. Great question. Because now we're talking about the money. The push up, everybody, was 38%. 38%. Right. So let's see where 38%, hypothetically speaking, this is a whole bunch of hypotheticals, right? Hypothetically speaking, if 600, you say 600? No, more.
Where we at?
So if we leave our, let me see. No, if we leave our lows right here.
Yeah. I say end of the year, my mind's 665.
Yep, 660 something. Yep. 665. And that happened from October to July. October to July, we went up. So that means that was, if we, hypothetically speaking, if we go another 38% run from the lows we had today, we would be bouncing off of 505 and we'll be running to 660 within October, November, December, January, within like 9 months.
Hey, Chris, bring it back to about 480.
Four,
the gap down there.
480?
I was going to say, I think we're still going to go lower.
Yeah,
480 on
go
spot.
back to about 480 up in that area is a gap.
Let me see. 480-ish.
Whole structure. If we break that, then it's over.
480. Let me see what I see.
Let me see what I got on my chart here. Hold on a second. And it's just some curious things I was, when we break a structure, normally, like when, how we draw them in a box.
Yep.
If you draw the structures in a box, I normally top of the box, move it up, top of the box, move it up again. That brings us to 600. I'll show you.
Okay.
Later. But yeah.
You want to share your screen, or you're not on your screen right now?
Well, let's see my.
Oh, okay, never mind. Don't worry about it. You good? We got a crazy gap between. Say it again.
How do you bring that percentage thing up again?
Oh, it's just the trend line. Just don't click it. Just click it one time and don't click it the second time.
Okay.
Yep. Yep.
Yeah, not that. Yeah, just down below there. I got right here. I'm on my chart right now. I was looking at. There's a gap down at. Give me just a second.
Okay.
Got too many screens open. And that's what I was looking at. What you was looking at here on the trend line. This is 480. 480.04. I'm not gonna get that tight. But that's the bottom of the balance range breakout from way back.
Okay.
So it looked like they bring the market back in balance because we shot up too quick.
Yeah.
And then if we go from that 480 up to 600, what do we get?
Money, money, money.
That's exactly what it is. And my price target is 600 for about the end of the year for spot. That's my price target, right?
And when I do my little boxes, that's why I got the 6 too. Exactly. So it coincides. 600.
Perfect. Who was that? Go ahead. Thanks for my.
I was saying I was waiting for you to hit us with that.
Oh, the price target. Oh yeah, that's 600 spot.
I was waiting for it. Maybe next week.
Yeah, that.
I know it's coming.
Yeah, that 600 spot, it's there. So and now, last thing before we sign off, right? Let's look at this and see, okay, why do we think it's coming, right? Not because we just think the market's just going to go up. That's not why. Q, which indicator are you talking about, Q? Yep, Miss Iola, I see that 440 gap is crazy. That's a huge gap on 440 on SPY as well. That'd be a huge fall. Good geesh Louise. Q, which indicator are you talking about? But why do we think the market is still going to have, we believe the market, why do I say I think the market is going to be close to a 600 by the end of the year? The reason why is because everything that's supposed to happen is in line to happen right now, right? So rate cuts are about to happen. About to have rate cuts. We've been waiting on rate cuts. So look, that's about to happen, right? Rate cuts are going to relieve a lot of things. Rate cuts are going to help small caps go crazy, right? That's the plan. And everything that we were fearful of is starting to fade away. Okay? So once the rate cuts come, we understand how many rate cuts and what's going to be the basis points and all those things that happens, we're going to see this market start to get what it wants, and it's going to start pushing up. Granted, keep in mind, the market that ran up right now, it ran up off of AI momentum, but more importantly, it ran up off of the idea that the market was going to go up because rates were going to go down. They thought rates were going to go down sooner, like in March. But now we're waiting to September. So all of that money that was priced in for March and for April, May, June, whatever price cut, those funds their funds are now being taken off the table, and now we have to they're reevaluating and say, okay, now when the rate cuts actually happen, how much should this market actually price in now? Okay, so I believe we're going to get everything the market's going to get everything that it desires, everything that it needs is going to get that, and that's going to push the market up. That's my thought process. Okay?
Chris.
Yep, go ahead.
Yeah, I was going to say historically, like you were saying, before the Fed cuts rates, the market normally goes down. So it's on par exactly like it's supposed to play out.
Yep.
You know, if you look at the history before the Feds cut rates, introduce rates, anything, the market normally pulls back because they'll price it in. Take the money and run when the retailers get in. They try to flush everybody.
Flush everybody so they can get right back in and take the same money and make more money off of it, right?
That's why we need to follow the banks.
That's it. And who, I think that was Q had a question. Q?
Yeah, this is me, Chris. I was wondering, can you explain the settings to the indicator by Rob Booker?
Yep. So on Rob Booker Knoxville, the settings are, hopefully this computer don't die. 30 bars back 30. So it's gonna go back 30 candlesticks. RSI period 21. The momentum 20. You want to put those on there because what it's going to do is it's going to give you a stronger. When you have to go 30 bars back, anytime an actual indicator pop up, and what the indicator looks like is this red line right here. You see these red lines right here on my screen. Though you can see they're here, then it push up some more. Those red lines show me that, hey, momentum is slowing down and we're oversold or we're overbought. And then sometimes you will start seeing a divergence happen when that transpires. And we know when divergence happens, that means, okay, slow down. The market has to come back and correct itself. So what you will start seeing is, so now what I'm looking for is this. I'm looking to say, okay, when am I going to get my first divergence saying the market is oversold? And we haven't had it yet. You're not even on a 1 hour time frame on SPY. I think I saw it on the video, so you look right here on the downside right here. I don't use it on the 15-minute time frame at all. I really only use it on like the 4 hour in a day. But you look right here, you see how that red line is going down? That red line going down tells us that, hey, momentum is slowing down and the stock is oversold. Now, it doesn't mean that it's about to go up. It's just a warning. So you can't use it as far as saying, okay, this red line popped up, time to buy calls. No, because it can keep going. It can keep flooding down with it. But just know that, hey, even though the stock is going down, the momentum is slowing down and we are oversold. Okay?
Yeah, that's understandable. I mean, I've been on trading for a little second, but, you know, once I got your course and you kind of like broke support and resistance down, I'm not gonna lie, like I keep paper trading and just like starting off with a small balance and keep building up, and I like listening to you with the support and resistance. Like I be telling my wife, like, you know, Moses, everything you do is support resistance, and like it's making me understand now. Like I see more green in my trade than red, if that makes sense. Like I'm securing more trades, like I'm winning more than I'm losing now. So that's like a big thing for me. So it's like I had to slow down, and I've pushed back and went back, but I see the game changer in it. So it's like I just want to thank you because like you explained it so much better than other people, and like it makes total sense. Like, and like you said, like once you see it, it's like it's a repeated pattern. So I appreciate that.
Oh, all praise to the Most High, brother. I'm glad you're around and glad you're learning, brother. How long? You say you've been trading before? How long you been trading?
I've probably been at it for probably about 6 months now.
Okay.
I started off with a guy named Trap.
Okay.
I don't know if you know him, Wall Street Trapper.
Yeah, Wall Street. Yeah, he dope. Real dope.
I like Trap. He everywhere. It's just like you explain it step by step instead of explaining one thing one day and then go and explain something else one day. And it's like I like how I can just work at my own pace with you, and it's like it's more simple, and like you use music, and like music is in everything. That's what people don't understand. So like you just break it down instead of all these big words. You make it understandable for like people like us, you know.
Yeah, definitely. Yeah, definitely. Everything. I'm definitely glad that you learning the process, man. It's real dope. And like I said, everything that we kind of focus on is trying to find where them buyers and sellers are. So when I'm using that support and resistance, next thing, if you focus on having that support and resistance, next thing I want you to do is go focus on that supply and demand. And when you start seeing support resistance lines inside of the demand zone, inside of that resistance line, resistance area, supplies the area as well, it's like even more confirmation, right? Even more confirmation, man. So that's dope. That's definitely dope, bro.
And another thing, I gotta like I'm using Webull, but I'm trying to convert the Thinkorswim, you know, and like she's on Thinkorswim, but I'm on Webull, so it's like when I look at Thinkorswim, because I've been with Webull so much, it looks kind of crazy to me. So it's like watching your videos, it's looking more clear, but Thinkorswim just looks kind of crazy. But I kind of do more of my trading on Webull, but I kind of like the Thinkorswim platform, but I'm trying to convert to it, but I'm just being hard-headed. But I'm always on your classes. I'm always with, you know, I'm always trying to do what you tell me to do, because if it's working, it's working.
Definitely. I'm the same way, man. Listen, I hate changing if I do something like this one company, I forgot the company's name, but they have a trading platform, and they basically told me, it's like, Chris, we'll pay you about, I think they said they'll pay me about $100 per person or $150 per person that I can get to come to go to their platform. I'm like, man, that's dope, but nah, I can't do it. I said, listen, I don't want to, I'm beyond, I don't even want to look at your platform or learn your platform. I got them sticking with what I know, so it was not even, it's just about being comfortable with what you're using, man. So if you're using Webull, don't even worry about switching over. As long as you can relate everything that I'm saying in Thinkorswim to Webull, bro, ain't no purpose of changing over.
Most definitely. Thank you, man.
Yep, no problem. All right, everyone. Well, listen, everybody, hopefully you all enjoyed this. Tomorrow morning, we got live trading at 9:15. Remember, we're focusing on SPY to kind of get an overall idea where the market is going. A break of 524 when you wake up tomorrow, everybody, is a good sign. Okay, it's a good sign. It's not a great sign, but it's a good sign. Okay, and if we're not above 524, everybody, we could definitely be falling back down to 509 and potentially going back down to make new lower lows. Okay, so just get prepared and remember, don't get caught up on just calls. Everybody, you make money off of calls and puts. All right, just look to the left. Go ahead, brother. What's going on?
Hey, real quick. So you think the video gonna fall somewhere or what?
Man, listen, I think right now I'm the catalyst to making the video fall. Because every time somebody ask me that question, I always say, man, I don't think it's going back down no more. And lo and behold, that thing make a new low, a lower low. So it can, man. Like literally, I don't think I don't think the bottom is in place, which is scary for me. Like it's real scary for me. But I don't know if the bottom is in place yet because the market is so sensitive, y'all. Anything can make this market fall down right now. Anything. More bad days.
Not to cut you off.
You good?
You know they're talking about what's going on over in Israel.
Yep.
Iran is going to attack Israel or shoot some missiles over there or whatever. So
yep,
that's probably got things volatile. So
yep. And something happened this week, and something happened over there this weekend that was kind of under the radar. Like something happened over there this weekend that didn't get too much headline news because everything else was going on. You see what I'm saying? So the market is so sensitive right now. People just like, listen, I just rather have my money in my pocket. You see what I'm saying? So
I don't know. I was watching the stock channel today. They said that usually like when this happened, a lot of people get shook out, but they said not this time. And you see Charles Schwab.
Hey, listen. Hey, exactly. And also, before we go, if you go back and watch CNBC, like everybody what I do a lot on my phone after the market closed and during the market, I'm watching CNBC television on YouTube. They have a lot of short segments on there about analysts coming on and talking. You hear a lot of analysts on there saying, man, listen, we bought the dip. We buying in. Hey, we buying in. Because one person said it best. He said, listen, he said he had the privilege of be doing this for 35 years. And he says, what's happening right now is nothing new under the sun. He said, I seen it happen in 1980 something. He said he seen it happen in 1998 or something. And all that, he said, it happens. And then next thing you know, the market ends up at an all-time high. So we'll see. Time will tell, though. All right, everybody. You all have a good one. All praise to the Most High. I will see you all in the morning, okay? Have a good night.
All right. Thanks, Chris.
Thank you, everyone.
Good night. Thank you. Good night.
All right, everybody. Hopefully you all enjoyed that segment. I was not looking in the chat on YouTube. So let me take a quick look at this chat on YouTube and see if you guys had any questions or y'all made any comments. What's up, Philip? How you doing, man? Chris, I'm new to investing, but learning from you, I can see or know what I'm doing at. I can. That's good, Chris. That's good. Check, man. I appreciate you. I feel I've learned so much over the last two run-ins as far as reading candlesticks, support, resistance, supply zone, demand zone. Definitely, Chris. Definitely, man. All praise to the Most High. Should we be looking for puts tomorrow after test resistance? So great question, right? So what you want to see is this. When SPY tests that 524 tomorrow, right? We have a support level around that 515, somewhere around there. 515, 516 should be a support level. So now we will have a box, everybody. You will have a box between that 524 area and that 515-ish area, right? You will have a box around there. So you want to kind of watch that box closely. Okay, you want to watch that box closely. So it's going to be kind of hard to tell tomorrow, but I think we may end up above 524 tomorrow. Okay. Okay, cool. What's up, Six Hustles? How you doing, brother? All right, everybody. Well, listen, I'm going to jump off of here, everybody. But anyway, if you're brand new to this, boy, you knocked out, huh? You were knocked out. He get you in the bed. Anyone that's new and they want to learn, I'm having a free class this Sunday, everybody. A free class this Sunday. If you go into the description box, you will see in the description box that I have, the link is there to join in, everybody. All right, everybody, listen, you all have a good one. All praise to the Most High.